Hello and welcome to this Fireside chat with Stendörren. My name is Victor Rudstenhoff and I'm an equity research analyst here at ABG Sundal Collier. With me today is Erik Ranje, CEO of Stendörren. And as our first question for those new to the Stendörren, could you give a brief introduction to the company and the markets that you're active in?
Yes, thank you for having me here. We're a listed real estate company focusing on light industrial logistics and warehouse assets. We have properties for around 12.6 billion SEK. Generally high yielding assets, initial yield slightly above 6%. Long leases, average remaining lease duration is 4.3 years, so we have a stability in the company. Key thing to mention here is the location. We are almost exclusively located in the greater Stockholm region. 1/3 is actually the Stockholm municipality, 1/3 in the greater Stockholm region, and one in Mälardalen, 1/3 greater Stockholm region. So we are, you could say, a derivative on the economic growth of the Stockholm region, but also a derivative on e-commerce in the sense that we build logistics assets. We have a building rights portfolio, 650,000 square meters, to be compared with around 825,000 square meters. So in relation to our standing assets, we can build, let's say, 80% more. So that is the sort of investment theme of Stendörren: high yielding, long leases, but also a sort of growth company with building rights portfolio and a derivative on macro trends growing.
Very good. You recently signed a very big lease with the Swedish Fortifications Agency. Could you just give us some behind-the-scenes color on that transaction? Did they approach you? Did you find them? Well, there was an inside scoop.
Well, as a little bit more background, that is our largest tenant, Coop, leaving us, representing 9% of the lease income, leaving us September this year, and we let these premises to the Swedish Fortification Agency. That is 129,000 square meters, so it's large. And they take the property possession the day after the existing lease with Coop Labs. We approached the Swedish military, I think it was it even 2 years ago, as a sort of a potential lead. And however, the Swedish military are not responsible for actually sourcing the sort of real estate. This is a Swedish Fortification Agency. So after a while, we were, you could say, approached by them. We have reached out one way or the other to them on our initiative, so to say. But yes, and it was a fairly long discussion event, and eventually we landed this lease just 2 days prior to Christmas.
It's a bit of an early Christmas present for
I was
for the
very
shareholders.
happy. The best Christmas present actually this year.
Very good.
Or last year.
So you've got some tenant adaptations that you need to do to the property now that they're coming in. Do you have a sense of the yield on cost for those?
Yes, there is an explicit sort of percentage in the lease agreement, and that percentage is sort of a couple of percentage points higher than the valuation yield. So the more they ask us, the more profitable the deal will be. But we are sort of in discussion on what kind of adaptations they want us to make. Yeah, it's hopefully a relevant amount, so to put a little bit more icing on the cake on the deal, so to say. We have also some, let's say, more general capex to be done as a part of a capex backlog, general refurbishment, and that is on our cost, if you want. Yeah.
So, if you put a figure on it, what would it be?
I don't want to put the figure on it. We haven't communicated that explicitly yet, but we have already started to do some more general refurbishment as well, the roof, for example. Yeah.
Okay. So looking on the fourth quarter here that you reported, you had surprisingly strong operational metrics. So better on earnings capacity, better on NOI margin, better on occupancy than what I think many in the market would have expected. This was also the first time you reported earnings capacity on the pre-tax profit line. Do you want to go tell us a little bit about what went into that and why you chose to start guiding on this?
Yes, but before I do that, you missed the fourth sort of operational performance that I want to highlight, and that is that we completed around 40,000 square meters of projects. Almost, I think it's let to 85%. And a handful amount of light industrial, a handful amount of logistics, new projects. And most of them we started on a speculative basis, but we managed to let them, and so I'm very proud of that. Therefore, I thought we should mention that as well. Well, the reason why we, in our earnings capacity, sort of continue all the way down, so below financial items and income from property management, is the fact that we have just realized that several investors and equity analysts failed to get the numbers right when it comes to interest rate hedging. We was quite early before the invasion of Ukraine 2.5 years ago, almost, or we did these hedges more than 2.5 years ago. And then we just a while ago increased, when there was a little bit dip on the interest rates here during the fall, increased the hedging. So we have 85% of our interest-bearing debt hedged, with the remaining tenor of 3.6 years at the then hedged to STIBOR of 1.4%. But we just realized that the equity analysts and others failed to get it correct. No offense.
None taken, but we'll try to do better in the future here.
Yeah.
So in 2021, and I'm trying to get into the head of Erik Ranje here a little bit. In 2021, Stendörren expanded your footprint geographically. So you entered Oslo, or the Oslo region, Denmark, Finland. You've also got some properties in Borås and around Gothenburg. Stendörren is to the most part a Stockholm Mälardalen company. And if you're looking out to the future, how do you think about your geographical presence? Do you want to build volume in these satellite geographies and increase efficiency, or do you look to sell off maybe some of those assets and invest in your project portfolio, for example, or here in the Stockholm region?
Yeah, well, I guess we do prioritize the development portfolio as a result of the fact that that is a kind of an ongoing business that we cannot really sort of stop and start easily. Secondly, it's very profitable. We already have the building rights in our balance sheet. So the increment, you mentioned the yield on cost earlier, and that yield on cost calculation includes obviously the building right value, which we already sort of have in our balance. The incremental sort of net operating income divided by capex, the incremental effect is even better. So it's a very profitable business, obviously. And it's also capital lean, because you can take it to the banks to finance it, and the building rights is more or less the equity part of the financing, which means that we get a very high leverage on the actual capex spent. So it is a sort of economically better deal for us to prioritize. But then secondly, we would like to expand by way of acquisitions as well, and we want to build the critical mass, but we have put that on a little bit lower priority as because we have prioritized the development portfolio, but also because prices were basically falling, so we want to see a little bit the prices bottoming out before we continue to expand by way of acquisition. But we do still aim to build critical mass, and we are getting close there when it comes to Copenhagen. And secondly, we did buy fairly dry assets, fairly asset management light assets. So we bought fully let properties with long leases, with a lot of sort of responsibility lying with the tenants. So basically triple net like assets. So for us, it's not sort of time critical to build a critical mass. We still have a lot of time to do that.
Okay, so if looking at these, you say that you have more or less achieved critical mass in Copenhagen or Denmark. Do you think you'd like to build critical mass in Oslo or in the western parts of Sweden first? Just between those two geographies, where do you think it's most
we don't really prioritize like that, because it depends on where you have the deal, and it's a little bit of a currency matter, of course. NOK contra euro and DKK, which is basically euro. but it's also where you find the deals.
And so I guess that's sort of what I'm asking as well.
Yes, well, it depends on the deal. If we, wherever there's a good deal which makes sense strategically for us, then we will do it.
Okay, very good. So turning then to the financing side, you mentioned on the most recent earnings call that you'd be looking to take out the hybrid that's maturing after the summer. Are you looking to replace that with a more traditional debt, or is this just a deleveraging process, do you think?
Well, it's in general, there's a deleveraging process, I would say, but it's also a question of, I think that the capital market-based financing, including hybrid, has a role to play, but a little bit opportunistically. And over the last couple of years, obviously, the market has not been there. If there's a good market, we may very well sort of refinance it into another hybrid. It depends on where the market is at that point in time. And it's obviously not a tremendous amount of time left, but it's nonetheless some time left. And it's natural to refinancing at a lower amount. I think that is generally the way forward. And then use senior bank debt instead, because it's a cheaper source of financing and more reliable source of financing over time as well.
On that, and on the theme of your marginal cost of debt or new debt, now that you've effectively got the Swedish state, or the Swedish military, as a counterparty on this big lease in Upplandsbro, what does that do to your financing options? Are the banks more happy to extend better terms, or does that do anything to the calculus at all?
Yeah, I guess it does. I mean, the Coop lease lapsing and leaving us representing 9%, and we of course did not have or would not have had 0% vacancy. So at that point in time, otherwise, so that would add to, let's say, 15% in total. And of course, that has been a topic to discuss with any sort of stakeholder in Stendörren, including the banks. So of course, it makes the discussions with the banks easier. But bear in mind, we have grown the company over the last couple of years. When I started, I think net operating income was below 500, 480. Now in our earnings capacity is 711, and we have last year we built 400,000 square meters. We have made a number of acquisitions. The source of financing for that has been bank debt, and of running cash flow as well, of course. But during that period we have also decreased the amount outstanding when it comes to capital market-based financing. My point is that the banks have provided us with capital over the last couple of years, even though that has been a little bit of a tough market. The banks have really been there for us. That has been the prime source of financing for growing the company.
But so this, you think, doesn't materially change anything for you? You've had the support of the banks all along.
Yes, I guess that is my point. Of course, they may very well become a little bit more supportive, but they have been supporting all the way. And then secondly, I mean, I don't know if you read our press release when it comes to the leasing to the Swedish Fortification Agency, but we did send offers to interested tenants, potential tenants, representing more than 500,000 square meters over the last, let's say, 6 to 9 months. So there has been an appetite for those premises, even though it's as large as 129,000 square meters. And that's of course been a part in the discussion with the banks as well. That there is a sort of appetite for this.
Very good. Also, you and I had a bit of an exchange on the most recent earnings call about your project margins and what are you looking to achieve yield on cost wise for your projects. Then you said that you'd like to achieve 150 to 200 BIP margin to your valuation yield of about 6%. So taking that into account, when you look at your project portfolio, and you mentioned that you think this is an attractive use of investment going into the future here, how much do you think you'll be doing in projects in the next 12 to 18 months, do you think?
Well, we did complete 40,000 square meters during last year. We have what we refer to as ongoing projects, amounting to 50,000 square meters. And I think the completion of those that's continuously, within the 12 to, let's say, 18 months then. And that, so I mean, so that's, I guess, part of the answer, 50,000 square meters. Then we have in total, I'm repeating myself, but in total we have some 650,000 square meters of building rights. So we have more to tap from our building rights portfolio, and we are continuously, obviously, going through out of this portfolio what can be converted into a deal within as short as possible. But I mean, if I would take a guess, 50,000 square meters per year, that's probably a run rate. Yeah, if I would number crunch it, I would probably put that in, not as an estimate, but it makes sense. It was the case last year, and that is what we have in our ongoing portfolio or ongoing projects. So I think that would make sense. And then my job is, of course, to convert it into projects to the largest extent possible within the shortest time possible. So that's what we're try to achieve. But that's a reasonable figure.
Very good. I think that's all we have time for today. Thank you very much for coming here, and very good luck.
Thank you.
Thank you very much.